Hi, welcome to this video. Date is on the 16th of February. We are on Sunday. We're just going to be taking a look at the best Forex pairs in our view to focus on in the week ahead. Now, in terms of charts, we've got plenty to look at. We'll go and take a look at them in just a moment. I'm also going to go through some tips in relation to the overall structure of the market and also in terms of catching bigger moves. Now, we do say in our videos that really you should be aiming for 200, 300 pips or more. And we've got plenty of those sorts of moves. Most traders go for too small a profit objective, and against the risk they have to take means they don't get anywhere in terms of building profits. So just go through some tips in relation to getting in and holding big trends. Now, in terms of the week ahead, it looks like it could be an interesting one. So let's go and take a look at all the charts. And just before we do so, please do keep in mind, it is my view as of this specific moment in time. It can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video and you'll get live access to our member center. Right. In terms of pairs we're going to look at first, we're going to start with the majors. Right, Euro USD, our first pair. I'll do this one fairly quickly because I've done an in-depth video on this pair and Euro JPY yesterday, which you go and check out. But in terms of Euro USD, our view has not changed. It's been the same the last couple of months. Limited upside, plenty of downside. And the Euro's broken down quite nicely since you topped out above 112. It's kind of a gentle fall here. And then after that test of the 20-day moving average, off to the downside in a big way. Now, in terms of this trade up 350 pips, are we going to see more downside or could we have a rally? I think the odds of a rally are pretty high, but I wouldn't want to swing trade the rally long because there's just not enough upside in our view. We could get to 109, it's the round number, but that's only 80 pips. We could get through the round number, but if we do, this 20-day moving average will snake down and provide resistance. So just not enough upside against the risk. And while this looks quite a severe fall here, we have got historical low volatility in this pair, which means you can still get a big red extension candle to the downside. My own view, if you want to trade Euro USD short, pop a small short in just to be in on the action, so to speak. If we do continue lower, then just sell the first bounce. You can come off the 109 level. If we top out to that level, or if we go through 109, sell back through the round number, or sell into the 20-day moving average, which will snake down. If you look, the big picture behind this pair, the fundamentals and sentiment, nothing good for the euro, really. Obviously, you've got negative rates in Eurozone. That's a big bearish fundamental for the euro. Other side, you've got the USD with a positive carry. So you get nice carry interest on euro shorts. So if we do bounce up, then basically big institutions are going to hit it hard for the carry. Also, if we take the big fundamentals behind the chart, they're just really bearish for the zone. Poor economic data out last week, zone being recession soon. A lot of people are still bullish of Eurozone recovering. We're not. And I still think there's plenty more speculators to come in short. Speculators not overweight in terms of short positions. So more downside. 104.50, then the par level. I like a pair when you've got kind of the big fundamentals against it and the interest rate, which is happened in this pair. Everything for us long term is against it. And the big fundamentals do drive the big trends. Okay. Now, in terms of the euro, I also say this every week, there's really good opportunities in the euro correlated currencies or proxies. So we've had some really good profits from those. If you're bearish of the euro, you look at the proxies or can look at the proxies, you may very often get better opportunities. We'll look at the proxies in a moment. I'm generally bearish of the euro on the safer currencies, but I'm looking at swing trading it long against a couple of currencies, which I'll come to a little bit later. But this one, big solid downtrend now, I think, bounces selling opportunities. So where are we going next? British pound. British pound against USD. Sorry, did have a fall here off that big rise and down to support, big support there, and then working our way up the 20-day moving average, which we like. Obviously, if we're bullish, we want it to get above the 20-day and move away from it. We could move away from it next week. In terms of this trade, not much out of it really. 100 pips, but we lost on a trade there. So really just getting back our loss. But if we look at the big picture, pound is so deeply oversold historically, and also it's looking bullish for the pound going forward. Yeah, big fiscal stimulus coming from the government. We had that change of chancellor in the UK. Fiscal stimulus boosts growth, boosts inflation, means the central bank can stay on hold. Just going a long way to the upside. I'm looking longer term for the whole Brexit decline to be retraced. I mean, these are longer term numbers here, but in the short term, we can easily get back to the 135 level. Pound looking very bullish for us across the board, but what I would say is pound USD looks nice, but look at the pound on the commodity currencies because they look great risk to reward setups. We'll come to those in a moment. I've done very well out of pound against commodity currencies over the last 5 months. Been our top performing trading idea. Right, next pair. AUD USD. It's been a decent downtrend for us. Managed to get in just on the reversal back through the round number. 20-day moving average gives way and then we come back to test it. Can't get through it. Down. Now some choppy sideways action, 20-day moving average. Just not too far away from the price. I think the Aussie longer term is going down, but it just brought our stop down because I want to protect us against a possible move to the upside. Now, in terms of playing the Aussie, if you're not in it, I would sell through here. Okay, new daily chart lows. If we did get up and our stop was taken and we got up to the 68 level or above it, just look to sell back through the 20-day moving average. We haven't got much upside in this pair in our view. I just think it might get a little bit of a bounce because there's a bit of optimism about the coronavirus problem maybe peaking with less cases reported and so forth in China. So that could give the Aussie a little bit of a lift. I think though, in terms of all the commodity currencies, they are going down. China, even if the virus problems are over, which I don't think they are, the hit on Chinese growth is big and it was slowing up before the virus. It's not going to recover in the coming months. Growth is going to continue to slow. The demand for commodities will drop. That way on all the commodity currencies. So this one, I think if we did rally, look for topping action, just sell to new daily lows, going down to 63, then possibly 60. Also, if you're following the commodity currencies, keep your eye on important commodities to give you clues to where they might go. Just flick over and have a quick look at a couple. This is crude oil. Obviously, Australia doesn't export crude oil, but this is one of the leaders of the commodity complex. If crude is going down, it tends to drag other commodities with it. And big fall, a little bit of retracement back to the 20-day moving average. If we could really poke through that second level, you could get some strength given to the commodity currencies generally. If we don't, we break to new chart lows, which the commodity currencies tank. And I think the other important commodity to keep an eye on, Australia is a big exporter of copper, is obviously copper. And it is, called Dr. Copper. It gives an indication of the health of the global economy. Big fall here. Working our way back at the 20. If we could really poke out up to the upside and get above 2.7, that would be bullish for commodity currencies. I don't see that happening, but you should keep an eye on it. If we fall through here, snap this level gives way. That will really weigh on commodity currencies. 2.5, big level, no support until 2000. So keep your eye on the commodities in relation to the commodity currencies. Sorry, I've just said that. So this one, should go further to the downside, but don't rule out it'll pop to the upside in the short term. Now, here's a pair that just has not done much at all. It's USD JPY, and I personally feel the JPY is very oversold. This level here is a big monthly level. Couldn't take it out down, but then rallied back, and we're still not too far away from the level. Our position is basically evens. I might take this out actually and just wait for the break. I'm looking for a break to the downside. If we could break this level here, the 20-day moving average and support, I think we could see big downside selling. I just think, Japan, they've got fiscal stimulus now like the UK. I think that's bullish longer term for the Japanese economy. It's very oversold as well. And also we could get risk off. We've been mostly generally in kind of risk on. I know the coronavirus has been there, but stock markets have been pretty strong. They're still near multi-year highs. Risk off would be an additional bonus, but I think the yen is so oversold anyway. It should rally. This pair is probably not the most exciting yen pair to look at. When you get tight volatility, break from the range should follow through. I'm going to go for a break to the downside, but like I said, I might square that trade off on Monday. I'll see what the price action is like. Last pair in terms of the majors, Canadian dollar, USD CAD. Nice move up since we took it at 130.10 through the 20. And we haven't been back to the 20-day moving average for a good few weeks. Again, like the Aussie, I'm a little bit weary of this one. Bought the stop in tight behind the 20. I don't rule us out going through 132, but if we did, I'd look to buy straight back through the round number. Or, if we go through this 133 level, 133.30, get clear of the round number, go to 140. Now, bearish of all the commodity currencies because that China slow up is going to weigh on the demand for commodities, and also global growth and global trade are slowing generally. I fancy more upside in the USD. But in terms of this pair as well, central bank markets way too optimistic the central bank are going to remain on hold. You'll keep in mind it's got a really decent interest rate on it, what the CAD has, slightly more than the USD. I think they're going to be cutting rates very shortly in Canada, and that's going to give additional upside or help push the USD up. If they don't, it's kind of in the market price, isn't it? So again, like the Aussie, we could see the USD retreat a little bit, but longer term, very bullish of the USD. Right, let's flick over and look at some crosses next. All right, what are we on? Oh, sorry, we're on Euro JPY just very quickly. So I really like the look of this pair. I've covered it in yesterday's video, but just briefly, I like the way the price action has moved. We came up here to 123. That was big monthly resistance. That was actually the biggest rally in about a year and a half. The level holds when getting short. Snap the 20-day down. Try and hold the 120 level. Push off. Can't get to the 20. Then down through the 120 level. 120 will now hold rallies in our view, or they should fade into the 120, 120, 30 level. You could wait for a rally if you're a bear, or just sell a break of Friday's low through 118.65. Long way to go on the downside, going to 116, then 110, then 100. You can obviously view the video I did yesterday for more info on why we're so bullish of the yen. Just while I'm here, I've noted our stop is still at 121.20. Always a member of ours, I'll tuck that in 120.80 when I do my AM update. Just really like the look of this pair, 400 pips so far, which makes up for when I shorted the euro back here and I got taken out on stop for a reasonable loss, but got that back and a little bit of profit, and a lot more to come in this one. I'm looking at this one now as a great long-term trend. We shall see if it does unfold in that way. But in terms of Europe, obviously said I'm very bearish against the USD and the JPY. I am bullish. The euro, though, against some currencies, or two currencies, and the first one is going to be this one. This is just a short-term trade. The EuroCAD, big move down, biggest move, most volatile move, I think, about a year in in terms of this pair. It's been quite a choppy pair, actually. That's nothing more than a skew of the majors and an aberration. So my own view is I've gone long 143.80, 143.51, so a little bit underwater. I don't rule us going up, down a little bit more to 143 maybe, but that round number should hold. If we do go down, I'll probably key off with another trade or another trade through this level. It's only a small trade. Trade setup alike. Yeah, you've got high volatility. You can see that by wide Bollinger Bands. Nice steep fall outside of the band. It's really a skew of the majors. Yeah, from our perspective, trade this setup a lot. Yeah, the expected payout against the risk is good, and we have a pretty reasonable hit rate on these types of trades. And normally, when you do get a skew like that, you're going to get something back, which means you can bring your stop up. You can always take it out if it's not running up towards your target. But yeah, I'm pretty bullish of this one as a swing trade. We'll see how that goes next week. Also bullish of the euro against another commodity currency, which I'll come to in a little bit. Now, let's go and look at some more crosses and a few more USD pairs. Right, we're on GBP AUD daily chart, and in terms of the GBP, just extremely bullish against all commodity currencies. We've got all three short against GBP pound, treating it as one trade and just spreading our risks between the three pairs. And it's been one of our most successful plays over the last few months. Great move up in the GBP there. Took our profit and then waited for the 20-day moving average to hold. Okay, so yeah, if we're bullish, we're looking for the 20-day moving average to act as support. It does. We push up above it. We're above it. We should push away from it. Just to buy 94.30, 194.30 on a new high, or back to the support zone. You obviously want to key off on strength, but going a long way to the upside. I've got the 2,000 level there, then 215. So really another 600 pips on the upside at least. Just so bullish of the pound and bearish of the commodity currency. The GPNZD is a similar setup. So look at the one that's slightly different, which is the laggard of the three in terms of pound strength. The pound hasn't really firmed as much on the CAD as on the other two. And you see here, decent push up there. Back to support again. The 20-day moving average comes into play, holds it. And we're just above the 20. Tail came off on Friday. Breakout. That's what you're looking for in my view. 73.20. Just get clear. And then we should be off to 180 and then 190. So this one is a really good breakout trade to us. Let's go back and look at a couple of USD pairs. NZD USD, this has interested us. Well, commodity currencies interest us generally as shorts. Nice move down, bit of a rally, and then a little bit of downside action. That candle there is after the RBNZ. A little bit more optimistic about the outlook going forward. They were certainly more optimistic than we thought they were going to be. And the market, we're going to get a 100 pip rally. Shows how weak the Kiwi is for us. And there is that view that the Royal Bank of New Zealand could keep rates on hold for the next year. They're not. They're going to cut them. It's not looking good for New Zealand, like it isn't for Australia, really, with what's going on in China. If you wanted to come in fresh, if we go above 65 and the 20, just sell back through it, or just celebrate below 64, going down to 62, then 60. Looks like it's a nice downtrend. I think it's got further to run. In fact, I think the Kiwi now could run down a little bit quicker than the Aussie, although I'm bearish of both. Right, USD CZK. I'm just going to finish up with a couple of USD pairs. Going to look at one more Euro cross and a 3 JPY crosses to finish the video. Now, in terms of this one, USD CZK, and in terms of Euro, it's been weak, and you very often see the proxies go down with the Euro. Like I said, USD was hammered. The Norwegian krona hit the Swedish krona hard. It has come up on the Czech krona, but it's not a big move. This one is one to watch because I think it could play catch up next week. What you've got in price action, in my view, it's really attractive. You came down here to monthly support, push up through the 20-day moving average. Then it finds support at the 20-day moving average on a closed basis, poke down to the 20 on Friday, bounce, just poised below the breakout point. If we can break out to the upside, we should get up to here, then longer term off the top of this computer screen to 26. Czech krona, one of the most overbought currencies against the USD over the last 2 years. If we break out, I think we could see a really strong move. I also like USD Polish zloty. That's already broken out. One to focus on next week, I think. See how we go with this one. USD SEK, I've been following this one for a while. This one's had a nice strong move up. It's a nice volatile pair and more upside. This candle here on Friday, very bullish. And I think if we get through the high, we're already above 970, 970 level. Get through the high, we should follow on with higher volatility. Stop can behind this first level of support for anyone who's in it, or anyone coming in fresh. That will be the stop. Still a decent risk to reward to target. So yeah, I like that one. Let's have a look at Euro cross, Euro NZD. Big fall down there, big red candle on the RBNZ, helping to firm the NZD everywhere. But yeah, what we have is just steady up straight away above a round number, 168. Okay, we can't get through the 20-day moving average, but we finish higher close than there. Small candle. If we open blue, a 71.80, maybe even on to 174. Euro for us, a little bit oversold on the commodity currencies. Also, if you get a bit of risk off next week, then the euro will hold up better than the commodity currencies. Let's have a look at Japanese yen pairs quickly to finish. This is NZD JPY. Nice full sideways action. Okay, the high odds break at the moment is 70. If it goes through 70 down to chart lows, then possibly follow on to 60. You've got big resistance here, double trend line and the 20-day moving average. If we were to break above the level, the 20-day moving average and resistance, I've looked to sell back through. A bit similar to the way that I would play the commodity currencies breaking up on the USD. They could break up a little bit, but it's not going to be big upside action. If we look at the other commodity currencies, you can see it's very similar price action. Big move down, back to test the 20-day in resistance. Just sell that on a move away from the 20-day moving average in all three, really, isn't it? So sell weakness, CAD JPY, similar, sell weakness away from the 20-day moving average. If we break higher, like I said, you could just sell weakness back through it. I think next week we'll see what happens. I don't see a big move back to risk on. I just feel that the market's going to remain nervous. The global economy just not doing well. Okay, stocks are holding up quite well, but global trade, global growth, slow. It's going to get slower. I just favour the safer currencies over the risk currencies. We'll see what happens next week, but that is the forecast for this week. Thank you very much for watching me as per usual. Take care. Have a good day.